Good morning, everybody, and welcome to today's morning markets. So today we focus in on last night's minutes from the US Central Bank, the Federal Reserve, and it's all about inflation and interest rates. Okay, so what's the background here? So in December, the Federal Open Market Committee, so what's known as the FOMC, released their projections for interest rates and inflation in the US. And that spooked investors. So from a projection perspective, they said that they thought that there would be 2.25% interest rate cuts for this year. Previously, they said that there'd be 4 interest rate cuts. And also they could see uncertainty around the inflation environment moving forward. What did we see after that? Well, we saw a sell-off in global equities and we saw treasury yields, so government bond yields actually throughout the world, spike up. Now, what did we hear from the minutes last night? So it gave a little bit more detail around the discussion that took place at that meeting in December. So within the minutes themselves, they focused quite heavily on Donald Trump and the policies that Donald Trump is looking to enact. So particularly around changes in immigration, trade policy, also since Trump's November election victory, there's obviously been a lot of focus around tariffs on countries such as China, Mexico, and Canada. Now, when we think around that and when the Federal Reserve are thinking around that, what they're starting to see is actually there's a little bit of ambiguity, a little bit of uncertainty there. So what they felt the best thing to do was to actually pause and to wait to see what happens in respect of that there before starting to significantly move interest rates down overall. Just looking at some of the words that they said. So the Fed said that almost all participants judged that upside risks to the inflation outlook had increased. As reasons for this judgment, they cited recent stronger than expected readings on inflation and the likely effects of potential changes in trade and immigration policy. And I think there's something that I think's a really good way of thinking around this, which is the Fed chair. So he likened the situation to driving on a foggy night or walking into a dark room of furniture. You need to be cautious. And that's exactly what they're doing. So what's our take on this? We know that the US economy continues to be strong. It's outpacing other regions overall. We also know that inflation has very slightly ticked up, but one thing that we don't see is inflation more significantly moving higher from here. And we certainly don't see a 2022 scenario. So for me, myself, I think that actually it's quite understandable that the Fed are waiting to understand exactly what happens with Trump's policy before being more aggressive on pulling back on monetary policy overall. What did we see from asset market movement? So a really good day for equity markets. US equities led the way, so they're up 1.4%. Within fixed income, no real move on US Treasury yields, but we saw UK gilt yields move a little bit higher. That's everything from me. I hope you enjoyed today's morning markets. I look forward to speaking to you soon. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.